Welcome back to Tape Reading Concepts. It is the 14th of July. I'm recording this video by somewhat popular demand. It is the dog days of summer, and traders are curious as to what is the seasoned professional's experience, what's his perspective. I often get asked as to how exactly I perceive my own trading, how I analyze my results, and I wanted to give you a sample of the last couple of weeks, pretty much from the beginning of this month, including here the holiday, the trading around the holiday session, and then the general experience. We're going to look at the breakdown of the results and maybe even touch on some conclusions as to what you can expect from your trading, especially as your perspective matures, your risk management becomes very consistent, and you are selecting opportunities as you follow chosen markets. This is Comex Gold. This is the August 2022 contract. This is the staple market for me. I do trade gold, oil, the ES index, occasionally some currencies and some other commodities, but this is my bread and butter market. You can see here no trading right before the holidays, the holiday session. And then moving here into the Tuesday session, the market was on the way down. Keep in mind my participation in general with swing trading during the summer is limited. I look even at my staple market only intermittently as I'm in Eastern Europe, visiting family and working on other projects as well. Strong momentum here on Tuesday, coming to the table late. Risk gotta be managed tightly. I probably got spooked here by this momentary vertical, which didn't quite reach the Friday lows. And since the shoulder did form here on the right side, I got shaken out of what was otherwise the right side of the market on good momentum. You can see that the sharp changing direction here following this parabolic slide, which ended on a few layers of vertical here as price was really looking for the low. I tried to take advantage of a potential strong bounce here coming off the lows, but as the demand for these prices fizzled here just below 1775, you can see that I took a graceful and actually, as we like to say in our channel here, I flipped the tortilla on this one and decided to look for a little bit more follow-through. There was no convincing new low here, and as the market bounced off the lows, I terminated the position. So only small pieces here in this market. You can see 4 opportunities within the Tuesday session, which arguably was a very dynamic one-sided market to the downside in this case, ending up with a couple of small winners and a couple of scratches here. This I don't really count. This is a profitable position. This was an attempt, and since the market did not follow through to the upside, logically I didn't make anything, but plus minus a few ticks, up to about 10 ticks, I count these as scratches, whether they're true break-evens like right here, or whether they're only marginal profits, or for that matter even marginal losses. I consider this noise. It really doesn't contribute significantly to a trader's bottom line, so in order to not muddy the statistics, I keep these in one category. Moving into the Wednesday session, there was a bit of a gentle landing that the market did right here. This narrow range with the interaction between price and time here. You can see how I was marking certain reference points within this range as the buyers failed to capitalize on the swing failure here to push the market above the door. You can see that we did below here. There was, again, questionable price action here, even though the overall bias was shorts, and the market managed to recover above this swap area. I initially started with a long premise here of the dip and the strong recovery. Notice that these were, for all intents and purposes, the same bottoming formations, and since they appeared at slightly higher lows, my projection was that this entire swing failure, counting once, twice, will actually lead to the market making a mean reverting follow through to the upside, running through all the stops here established late within the Tuesday session. That did not happen to be the case with the secondary bounce. You see that I was managing here with zero tolerance, and you can see that even some mistakes were made here, even though the market was clearly leaning on lower highs and lower lows. For some reason, I must have held a long bias here, because you can see that following the vertical dip into the fresh lows here, I did attempt another couple long opportunities. I did fold the first one a little bit faster than usual. The second one cost me the full stop here, which in this case was about 35 ticks based on the noise that the market was displaying at the moment. And then I guess I came to my senses after what you would consider a loser and a half and a break even. I decided to get in line with the program. Relatively aggressive short, but in line with the overall idea. And since the parabolic collapse here, didn't really find any buyers. Definitely an early exit. I again should have stayed in this market a little longer, but I don't know. I was likely more interested around 11 a.m. here in the morning to trade the index, which is in its prime time. So I took profits here into the vertical, even though the market, you can see, continued another good margin lower. At least as much more was offered here. You can see these 110 ticks that I was taking. There's probably at least as much here on the way down towards the lows. Yes, as the market bottomed out in the afternoon, you can see that I took another small piece off of this market for a mean reverting move here of the, at this point, very thick shoulders from that bottom. This is now the Thursday session. You can see another couple of attempts here on my part for picking up some higher lows. Definitely some signs of potential accumulation, sharp transfer of energy to the upside, convincingly higher highs. So I tried to exploit that idea here on the backside of a downsloping frequency. I guess I didn't quite like this entry because the market was clustering, so I folded quickly here and then looked to reposition when the market dipped and recovered, which is the pattern I was already expecting here. I have already observed at the previous lows. There was some back and forth here in the middle, and ultimately that idea fell apart. You can see that there were no lack of attempts here from the buyers to push through higher prices, but there was just not enough demand for these higher prices. And as the market turned around here convincingly, it seems just about here with the 8:30 news, I folded the opportunity manually at break even. It seems once again that the long bias here played a part, and I did enter one more time here after a successful test at the line of maximum excursion, connecting the lows. And this one, it seems, did work out momentarily here, at least $1,000, it seems, more or less. Yeah, just about $1,000 of profits in this one. Was happy with the timing and the placement, but as it happens often, the idea just didn't flower as far as I expected. I was likely betting on significantly higher prices, but only a marginally higher high was offered here as the market was moving into more of a circular wave progression. That ended up being break even, so even though I was up probably close to 3 handles or close to 3 to 1, I ended up with nothing here. I did pick up, since the market didn't make new lows here and was persistently holding the higher lows, I did pick up another long with the same pattern at a slightly higher price, so just about $100 higher, just before the closing bell. And it seems that, well, I couldn't make any money with that idea, to save my life. Full stop here, 40 ticks in this case. This is likely happening overnight here, so hands off management. And then in the morning here you can see, so this is the Friday session now. There's the news here, 8:30 in the morning on Friday. Quite a bit of volatility in both directions. It seems like I was probably not, this is prime time for me, but I was not in front of the screen obviously here on Friday, since, or maybe I decided not to participate. I don't remember anymore. This is almost a week ago. The market didn't make it to higher highs, though it seems it probably got a little bit ahead of itself. I saw a chimney formation traded short here. It seems just in front of the Thursday highs, which I guess in my estimate in the market with the chimney formation got rejected at. So I bet that there will be a mean reverting back to the downside. This one, since it built me a good margin of profitability by the closing bell, I decided to hold over the weekend and I exited here cautiously, conservatively in the morning on Monday. Pretty happy with this one. You can see that this is only the second decent sized winner this week. So and you're gonna see this when we talk about the breakdowns and compare week 1 and week 2 since the beginning of July. Week 1 much choppier. My participation, my results much choppier, not very consistent. Small winners, lots of break evens, some losers, and only one decent sized runner here, which also was not managed in the best possible way. Here you can see lots and lots of ideas that just did not work out, where I couldn't really catch the exact rhythm or materialize the profits that I was expecting the market to project. for the next move. This here being the Friday session, and then yes, this is the first one technically from the first week since it was closed within the Monday session. As the market rallied here over the lows. I'll zoom out a little bit. These are not my, I have cleaned these charts up a little bit, so they don't include all my charting, just because then they get really messy. I also draw and delete a lot of things as the market situation evolves and as I create certain ideas and project certain opportunities. I do not write a lot of text on my charts, as you have probably already noticed. I prefer to rather color code my charting my lines and then just move on, as I usually keep a running commentary and a dialogue with myself as to what is available here on the field. So a second opportunity was picked up here midday or in prime time on Monday, and this one once again was taken over the closing bell here over the session to be closed early in the next session. Classic return to the center line trade here, when the market moving away from that 3D reference point from the early morning from the pre-market, and then as it topped out here, you can see that no new highs were created within the session. So I created the shoulder and saw the market eventually erode all the way down here on a projected target here. Just again, it's hands-off management as I leave the target and go to bed. Lots of volatility following this move. Once again, you can see strength down, strength up, the market quickly coming back to the middle, lots of back and forth in the middle as buyers and sellers are figuring out which way they're going to take this market next. Then the idea went to the downside. There were some, once again, higher lows here. You can see over time V-shaped reaction. So it seems that here in the prime time I tried to give the mean reverting hypothesis one more chance to go to the upside, but the market got rejected in the middle. So logically here, as I was wrong, my stop got triggered. It seems like I had a little tip here. Had my stop been a little bit bigger, I might have had a chance to sneak out of this opportunity on a break even, but such is the experience. This is how trading goes. Sometimes you get the bear, sometimes the bear gets you. There are losers, there are a lot of break evens or scratches or ideas that didn't quite play out. The market can manifest infinite variability, so regardless of which way you frame the idea, the market tends to surprise you. Following here later, previous couple of sessions later during this week, you can see that the Wednesday vol didn't take an opportunity until very late in the session. Once again, I do like trading late in the afternoon session. The gold market, since very often good opportunities are offered at that point. You can see this is the live edge of the chart here. This is getting close to, it's 5 a.m. Eastern time. In Europe, this is the middle of the day. I'm good 7 hours ahead of New York time. And this is the overall distribution. 17 trades in the beginning of the month, 4 runners, which are trades with 3-to-1 or better outcome, 3 smaller profits. These were the ones taken earlier in the first week. You can see these are roughly 1 to 2 handles, but they in general are less than the projected minimum 3-to-1 reward versus risk. Sometimes these are the result of getting profit stopped in a certain runner. Sometimes they're just manual management based on deteriorating compared to the initial projection idea. Quite a few scratches. You can see that out of 17 trades, I have 6, which is more than a third of the trades, which happen to be true break-evens or plus minus a few ticks. And then, of course, the requisite number of stops. Here you can see that there's at least 4 stops with an average size of about 30 ticks. But again, my stops vary between just under 30, which is somewhat rare with the current volatility, to sometimes 40 ticks or even slightly above that based on the noise level and the amount of risk that I'm actually looking to take based on where the structure is and where the idea would be falling apart, since this is the logical place for any stop. Notice also, once again, the difference between the 2 weeks, the much weaker performance in the first week, where, I mean, notice this is 1, 2, 3, so 3 of my runners were within this week, and only 1 of the losses. So only 1 runner and a lot of back and forth with the market the previous week, so a much better bottom line during the second week as compared to the first one. I guess one of the important takeaways is your results will vary from week to week, from month to month, but overall, what keeps the trader profitable, the consistent trader profitable over a meaningful number of attempts is approaching the opportunity with the same consistency, approaching the management with the same ironclad rules. You cannot afford to have big losers. They're destructive not only to your bottom line, but also to your morale. So far on the month here in Comex Gold alone, I'm saying 518 ticks, each one of course at $10 here per lot, which is not a spectacular result by any means, but on an average size stop of about 30 ticks here, even at a less than 50% success rate, which by the way is normal. This is still a decent number of handles or stops that I have already accumulated for this month. Hopefully this perspective is useful as you gain insight into my trading experience here in Comex Gold, and hopefully it's useful as you compare to your trading experience and the way you perceive opportunities, take and manage them in the summer markets. Like, share, and subscribe if you like this video. Let me know in the comment section below. I'll catch you traders in the next one.